this week's bi-weekly precious metals market update. The questions this week are coming in. I really appreciate the kind remarks on the webinar we did with FTM last week, and hopefully you've had a chance to get some more in depth. I would urge you to listen to it if you haven't listened to it. It's very important for your family finances and investments going forward. But today we're going to answer specific questions as we always do. They say, "What's up, Tom?" We're seeing money markets go up at brokerage firms, and we're seeing negative interest rates around the world. We're seeing the United States saying they're going to raise rates in 2019. They're actually dropping rates. And are we going to have negative rates in the U.S.? Certainly, I can't answer that question, but what I can say is it is weird. Just think about it. You've got Schwab and TD Ameritrade and all these big independent companies fighting over who can pay the most interest rate on your money that you're holding in the checking account that's not in the stocks or bonds, but are actually the cash on the side. And here we're seeing them now up to like 1.5% or 2%. The question you have to ask yourself is they raise rates in battle because a lot of money is going to the sidelines, afraid there's going to be a stock correction that's going to be negative, especially in October, November. So they're moving their money, they're fighting for it, but where do they get the 1.6% or 1.4% to pay you? Commercial paper. If you haven't done research on commercial paper, I would tell you to go look and look hard, because even though you're loaning money to big companies sometimes that are paying you back more than 1.6% to the client, something for the company and something for them, you've got to realize they're loaning it to companies that need money. That's the very definition of it, commercial paper. So it's like short-term loans. So why is that all of a sudden going way up, come down, and you got to look at the safety? Because if we have a stock market correction down, certainly the commercial paper, some of these companies are going to be at risk at what they have loaned. And yes, commercial paper goes under all the time. This isn't anything new. You don't really see it or hear much about it because it's not big, it's not a lot of them, but it is a risk. So as you watch interest rates go up in your money market, just know why it's going up, where the backing is. And then you got to look at the FDIC. Just go look yourself on their webpage and see how many assets they have to cover what they have insured. It's very negligible. It's almost nothing. So you've got to look at this and realize that maybe if you buy gold and silver, maybe it costs you 1 or 2%. It's still much smarter to put your money there in money market and have the physical silver and gold in your hand or in your account that we've set up for you in the depository, either in Toronto or in Delaware or in Texas. But if you haven't talked to us about, we have the #1 program in the world for storage fees. So if you don't want to take possession, we can help you with that. The fees are so low, we're not allowed to mention them on the internet. So just look at it and realize there's a lot of turmoil out there. There's a lot of things going on. You have people saying stock's going to explode, they're getting ready to go down. Gold's getting ready to explode, gold's going to crack back down. You're going to see every kind of opinion out there. That's the reason I hold my position, is that you divide your wealth 7 or 8 ways, 4 or 5 ways, whatever you feel comfortable, and you have your money in different baskets, because no one knows for sure what's going to happen, and you can't load up, even if you think one thing's better than the other. If you buy the things going down, your cost averaging, they're going to eventually come back up. Just look at oil, look at gold, look at silver, look at palladium, look at platinum, look at the stock market, look at the bond market. Every one of them had huge losses and huge gains in the past 20 years. So there's no bad investment. It's only a bad time to be in certain things. There's not just all good investments. There's a good time to be in and a good time to be out. So just continue to do your homework, listen to different opinions, and you'll be fine. But if you're interested in, we get a lot of calls right now for self-directed precious metals IRAs. People are retiring, they're rolling money out of their 401ks, they're opening 2 IRAs, one for self-directed precious metals and one for stocks and bonds. And you can have 2 different IRAs. We can be your representative. We can be your broker on that self-directed precious metals IRA. We can direct you where to get a good custodian. We can't be the custodian, but we can be the representative and the broker. So if you don't have precious metals in your IRA, give us a call. We can help you diversify there at 800-247-2812. That's 800-247-2812. And we would urge you to do that. So once again, keep the questions coming and we'll talk. I do think gold and silver are going to have another big breakout before March. I'm right down the middle whether it's going to happen in October or November. I've been very verbal about it. So if you get in now, you may be a little early. You may not catch the exact bottom. But on the other hand, if you get in now, you're going to be in with the next move. Remember, gold's up 17% this year. And we're looking for another big up year next year. So now cannot be a bad time to buy it. And if you don't have any platinum, I'm telling you, platinum is going to go back. It's going to double over the next few years. Even if it takes 4 years, it'll be an 18% a year compounded rate of return. So grab you a few bars of platinum while the price is down. And if you're holding palladium still, I still urge you to sell it and convert that to platinum. Dan and I'll be happy to talk to you about it. Once again, you can reach us at 800-247-2812. Until next time, this is Tom Cloud signing out.